Hey there, folks. How are you? Joe DeSanto here. This video is going to be, kind of introductory, really. And you might be thinking, well, hey, Joe, you're a little late on the introductory video for Bitcoin, man. I get contacted regularly by different types of folks. And, there's a lot of people out there that don't have the time or the inclination to dive in so much to investing. So there is a need for, more introductory knowledge, I think. And also, honestly, the Bitcoin thing is very confusing. It took me a long time just to get my head into it. I mean, never mind getting deep into being your own coin custodian and all that and, complicated things, but just understanding what is this whole system? And the whole concept of blockchain has evolved to being more than just, this sort of online currency. It's actually blockchain, and that technology has evolved into being what we now call Web 3.0. So it's been a really interesting evolution over the last whatever decade since blockchain or Bitcoin, I should say, was invented. So anyway, let's get into it. So Bitcoin is the first, what we would known as cryptocurrency, 2008, 9, 10, somewhere in there. I've read that it was created as a reaction against the financial crisis of 2008 and creating some type of currency that was decentralized and not reliant on a government or a host of governments to basically control the currency and remove barriers between end-to-end users, sharing money amongst themselves without having to basically go through banks or other centralized kind of organizations, and also require the participation of governments, that we have with fiat currency. So that's what we call, Bitcoin. It was this first attempt at having some kind of money that essentially could store value and would be worthy of exchange for goods and services, right? It hasn't really evolved to be exactly that, and we'll talk a little bit about why. It's pretty simple as to why. It's because the value of Bitcoin goes up and down so greatly that it really can't be relied upon as something to go buy a pizza with, because one day you might be buying a pizza and you're spending $10 worth of Bitcoin, and the next day it's worth 20 or worth 5 or whatever. But it was this attempt to create a digital decentralized currency for these purposes. And they haven't given up. There's a variety of different people involved now, and third-party companies that come in and try to, make use of these technologies. But they collectively haven't tried to, end that use case yet. That is still out there, but it's just evolved in so many different ways beyond that. But Bitcoin, being the original, was has its own what's called a blockchain. And I'm going to do a little illustration of what I think, how I look at what Bitcoin is relative to what the blockchain is. All right. And I really do think Bitcoin falls into a good analogy with gold, and it is kind of now thought of as digital gold. And I think that's, in terms of its place in the mainstream investing world, it is looked at as a digital gold, or an alternative to traditional investments, maybe a hedge against traditional investments like gold. And sometimes it's simply called a store of value. But the Bitcoin itself requires an ecosystem to exist, right? So, and that is the blockchain. So I'm going to do a little picture here of kind of how I think it works. And it's not unlike gold. If you think about gold as this thing some people buy as a store of value, like a hedge against other investments, or a different kind of alternative investment, a place to put your money, you can go buy gold itself and pile up a bunch of gold in your house and just sit on it in a doomsday style fashion or whatever. But there's a whole ecosystem involved in getting you that gold. First of all, it has to be mined out of the ground, right? So there's the miners that are part of that ecosystem. The circle's the ecosystem. We have miners on the ecosystem. We have you, the buyer of the gold, on the ecosystem. We have a commodities market or a trading environment for the ecosystem, so like a public market. We have individual traders on the ecosystem, like meaning, we buy gold. You can come buy your gold bullion here and put it in a safe or whatever. You even have, if you have actual gold and you don't want to store it at your house, you might have some sort of, off-site storage, safe storage, right? And so gold becomes this thing that you can invest in, you can own, you can store your value in. And inevitably, you might have it at your house. Maybe you have it in a safe deposit box or whatever. But in order for you to be able to get it, this whole ecosystem has to exist, right? There has to be miners, there has to be buyers and sellers, like sort of in a centralized trading capacity. There's you, the buyer, you're part of the ecosystem. Maybe there's offsite storage. And in gold's case, there are use cases for it, like jewelry. They're part of the ecosystem. They're buyers of gold. They help make the market because they're people that might drive the price up. You have electronics, maybe that might use gold. They're also buyers in that ecosystem. And this whole ecosystem helps also create the value of gold, which I don't know what it is today. Maybe it's a couple $1,000 an ounce. So Bitcoin also has an ecosystem that is very similar. So if you think of Bitcoin like gold, it is now really a store of value. But the ecosystem that helps it exist, I call the blockchain, okay? And blockchain is, I guess complicated technology probably. I kind of think about it as a giant spreadsheet that holds all this information saying this person over here owns some Bitcoin, this person over here owns some Bitcoin, this person over here owns some Bitcoin. And this spreadsheet is held on a bunch of computers, validators, around the world. I don't know how many thousands of computers, but the ecosystem and the ledger, the spreadsheet of information is held, validated constantly by validator computers that exist on the network or in the ecosystem, validators. Okay, so those are some of the components or some of the players in the Bitcoin blockchain ecosystem. You also, in this ecosystem, have miners. They're the people that get the Bitcoin, quote unquote, out of the ground, right? Just like you have to go get gold out of the ground. The miners mine the Bitcoin, essentially running processing power into the algorithm that generates the coins, I guess you could say. And they do the work to generate the coins out of the algorithm, I guess, that is Bitcoin. And for doing that, they get Bitcoin, and then they can go trade their Bitcoin on the marketplace, mostly in this so far for money. They're mining to get Bitcoin to go sell and make money, make a profit. There are other users on the ecosystem like you. You might own your Bitcoin, right? But currently, you might own and store your Bitcoin through what's called a centralized exchange, right? So we talked about gold and the public markets. Centralized exchanges, centralized finance, or CeFi, you might have heard, are places like Coinbase, right? So you might use Coinbase as a centralized public kind of marketplace where you can buy Bitcoin and hold it, right? You might also have your own wallet. You might have your own wallet on the ecosystem where you store your Bitcoin. And this would be truly DeFi or decentralized finance. So, if you have your own wallet that is basically connected to the blockchain and says in your wallet you have this many Bitcoin, you are truly like on your own island You're not relying on third party to hold your coins and keep them safe or anything like that. You have your own wallet to do that. Now, it's kind of like the Wild West in these cryptocurrency blockchains, and people are always trying to, like, steal stuff from other people from their wallet. So you have to be really careful about how much money you store in your own wallet. And you might eventually, if you have enough cryptocurrency, trade up to what's called a hardware wallet that provides additional security for you. Now, you might be saying, hey, why don't I just then go and use one of the big CeFi places to hold my coins, just like Fidelity holds my stock? The big difference there is that unlike when you have stock at Fidelity, you buy the stock through Fidelity, the stock's in your name, they're essentially holding the stock for you, but the stock's in your name. If Fidelity goes out of business, you lose any cash you have at Fidelity, but it's also insured, but the stock is still in your name. You still own your stock. With cryptocurrency on a CeFi exchange like Coinbase, you actually relinquish the ownership of the coins to Coinbase, and you are trusting them essentially to hold them for you in a bit of an IOU format. So if you had heard about FTX, the big CeFi trading exchange that went bankrupt, well, that person basically started spending everyone's coins and inevitably, I guess, spent them all or leveraged them all or something or other. He went bankrupt and basically everybody's money disappeared. You didn't have your name on your coins anymore. So that actually was a big, kind of eye-opening thing. And that's happened a few times already now in the last couple of years through this last bear market. Okay. So wallet on the exchange, we got miners, we have validators, and essentially what happens is, this blockchain that keeps the record of everything also is the entry point for all the participants of this network to come together and do things. And the miners getting the Bitcoin out, the exchanges trading up the price, the validators doing their job, they all make it possible for Bitcoin to exist as a store of value and collectively help set the price, in the open market. And the price is essentially what other people are willing to pay. So that's kind of like, my version of Bitcoin in a nutshell, and relating it to gold. Now, the interesting thing is that Bitcoin came along with this blockchain technology as a way of making the currency viable and having it be tradable and all these things. But somewhere along the line, people looked at the technology and said, you know what? That's a pretty interesting technology. There might be more you could do with that. If you built it from the ground up with the idea that you would do more with it than just have it be a ledger and a connection point for people, hosting or trading or holding the currency that is being tracked on the ledger. And that's where Ethereum came in. Okay, so Ethereum basically said, let's build a network that not only can be a blockchain network and sort of trade a currency or many currencies, but let's add in more functionality, what we come to know as smart contracts, where we could potentially use a ledger system like this to do a whole bunch of other things. And for example, we could have it sell art, enter NFTs, or NFTs can be a variety of things, but forms of digital art are basically bought and sold on the network, and the ledger tracks the ownership of that. And the ecosystem in the ledger also allows for a market to be created for digital visual art, which is mostly synonymous with NFTs. NFTs stands for non-fungible token. But that's just one of the early simple examples. Newer examples are, you're playing a video game where you use the blockchain to buy and sell digital assets within the video game amongst other players of the game. And now people are playing video games, which you might even say is the metaverse of sorts. They're buying real estate in the metaverse. The blockchain is tracking the ownership and value of that. And those assets are now being traded amongst players in any given, metaverse video game, right? So adding Ethereum to the equation really opened up the possibilities of what blockchain could do. So, and it turned out that the Bitcoin being the first one, that blockchain really wasn't, it was great for just hosting the ecosystem of Bitcoin, but it really wasn't built to do all these other possible things. So, but in a way, that plus the what we call tokenomics of Bitcoin, and essentially the fact that there's a limited amount of Bitcoin that can be mined, and the fact that the network and ecosystem doesn't really do all that much, it really allowed, in my opinion, for Bitcoin just to kind of stand on its own as a true store of value digital currency akin to gold or silver or something like that. Whereas Ethereum, even though that's, a blockchain and Ethereum would be considered a cryptocurrency also, Ethereum really marked the divergence of using blockchain technology off into these other uses. And to me, Ethereum is not, at least currently, not really a store of value to the degree Bitcoin is. I mean, it has a value, but Ethereum is the token by which you pay to do things on the Ethereum blockchain that might have nothing to do with money. Like, if I go buy an NFT because I want digital art, I have to pay some fees to do that on the Ethereum blockchain using Ethereum, right? So, truth be told, Ethereum was the third or the second altcoin. Some people also ask, what's the difference between cryptocurrency and coins and altcoins? Well, altcoins generally mean anything besides like Bitcoin. And again, people have different definitions of these things, but for the most part, I think people say, well, altcoins are generally meant to be, cryptocurrencies or coins or whatever that are not Bitcoin. They came after Bitcoin. I think the first altcoin was technically Litecoin. Similar idea and use case to Bitcoin, but it was supposed to be a little bit easier to mine, a little bit more, this, that, and the other. It sort of became, if Bitcoin was gold, Litecoin sort of became silver, but it didn't really become a network that people were using in other ways so much. Then Ethereum came along, and Ethereum and its smart contracts, and then it really showed how blockchain and the technology could be used in so many practical ways and in practical use cases for a whole variety of things. And so people started building apps on Ethereum to try to basically create, new interesting use cases for it. After that was happening for a while, people started saying, hey, this is really cool, but Ethereum's really expensive to do stuff on. And so other ecosystems, aka blockchains, started to be developed from the ground up to do more cool things at a cheaper price. And that's where you get into like a Solana or a Polkadot or something like that. Then, to even confuse it further, some ecosystems were created as what we call Ethereum virtual machines, or I don't know if if forking is the right term, but essentially, offshoots of Ethereum using Ethereum technology, but making it cheaper through some means or mechanism. And Polygon is an example of that. So Polygon is what's called an EVM, or an Ethereum virtual machine. And there are many of those. So this whole ecosystem is just exploding with all sorts of interesting technology use cases. And what I think is happening now is most of what's considered an altcoin, like some, random game coin, like anything, anybody can make a coin. You can go make a coin that's just your name, and you can try to get people to buy it. Go get some Twitter people to like pump it, if you can do that. And there's very little regulation around it currently. But I would say if Bitcoin's like a gold, like most of the other altcoins are kind of like stocks, where they're, trying to do something in the new Web3 blockchain technology ecosystem. And they're hoping that, they're going to be the Amazon of tomorrow on Web3. And there's thousands and thousands and thousands of them. A lot of those coins are also Ponzi schemes, scams, what we call rug pulls, and so on. So it's a very kind of like both complicated and risky world. And a lot of these companies are just like startups, probably just like if you were around for the internet era and the stock market boom in the early 90s, late 90s, early 2000s, the stock prices were going up like crazy on companies that had never even made a profit or even got their product to market. And that all came to roost eventually in like late 2001, and the NASDAQ went down like 85%. But from there, you could buy Amazon for $1, and God knows, whatever it's worth today, you would have made a ton of money if you bought 1,000 shares of Amazon at $1, right? So some people are in the cryptocurrency game looking for the next Amazon. Some people are in it basically to ride the Ponzi schemes up as high as they can and pump and dump. Some people are, the creator of the Ponzi scheme and trying to do a rug pull. Nowadays, Bitcoin, though, has been legitimized, and broadly, a larger group of people in this bull run that we are kind of seemingly starting or have started in January of 2024, where I think maybe we only had 5 to 10% of available investable funds in the world in cryptocurrency. Like, people are piling money in now through the new Bitcoin ETFs that have essentially legitimized Bitcoin as a store of value, as like a digital gold, and a legitimate place to put your funds that you might otherwise put in stocks or bonds or gold or whatever. So boats are rising with that tide for sure for right now. That doesn't mean all boats will stay above water in the cryptocurrency space, but Bitcoin is definitely here to stay, and I think Ethereum certainly is here to stay for a while, and we'll see what companies, technologies, and innovations are able to be brought to life, in this new ecosystem that essentially digital ecosystem and digital technology that I feel like Bitcoin in some sense almost inadvertently created. But yeah, I guess that's the same way it worked for the internet. Originally it was started by just like a way to communicate without a phone from computer to computer way back in the ARPANET days. And, who would have thought it would have basically reinvented like the whole way we live and do things. But it seems like blockchain technology has some of that potential. And that's why it is so compelling. From an investment perspective right now, finding the winners in a sea of craziness is incredibly difficult. So I don't think it's like necessarily long-term investing quite yet outside of Bitcoin, but I think Bitcoin probably falls into that long-term investing category, certainly above anything else that's in the cryptocurrency space. So anyway, that's my sort of meandering take on Bitcoin and Ethereum and altcoins and, how they evolved, how they fit together, and so on. So I'm going to make some additional offshoot videos regarding cryptocurrency and my take on sort of like the investability and so on of that. So keep a lookout for those if you're interested, and I will catch you in the next video. Thanks as always for checking out my content. See you later.